Welcome to another episode of our podcast. My name is Toon, Chief Investment Officer of Asia Pacific Equities at RHB Asset Management. Today, we're going to talk about the flattening of the COVID-19 curve and the possible recovery scenarios that we could see. Looking at the record-breaking pace of the stock market crash in March 2020, we believe that a huge amount of pessimism and fear was priced in at that point in time. Although our base case is that there will be a synchronized global recession in 2020, but if we use late March as a starting point, things didn't have to get better for there to be a bear market rally. They just had to appear less bad. And of course, the markets have received unprecedented levels of support from central banks and governments around the world. There will be a day of reckoning when the consequences of these excesses will need to be resolved. But that is a problem for another day and a topic for another podcast. Although the S&P 500 index has had a nice 20% bounce from the March lows, but the key question is, will we see the market hit new lows? Our view is false dawns have been common occurrences in financial history, and we don't think that the world is out of the COVID-19 woods yet. Before discussing any kind of economic recovery, we need to understand that the global recession we are having now is essentially a health crisis. But this is not a normal recession because the world collectively decided to shut down the global economy almost at the same time. This is unlike the 2009 global financial crisis, which resulted from a collapse of the financial system after a decade of poor financial decisions. In 2020, businesses didn't shut down because of a slowdown in the economy. They were told to shut down by their governments. Similarly, consumers didn't stop spending or lose confidence because they were afraid for their jobs. They were forced to stay home by their governments. The likely path of the economy will depend very much on how the pandemic evolves. As such, flattening the curve is the prerequisite for us to return to normalcy. At this point in time, as countries prepare to ease their lockdown over the coming weeks, we will still need to continue to monitor the flattening of the COVID-19 curves around the world. So what happens now when the world chooses to reopen for business? The base case is that we will have a sharp global recession in 2020, but the recovery will be differentiated and vary across the different countries and sectors. To invest in the post-COVID-19 world, it is important for investors to make that distinction. Different countries and sectors, and even different industries within the same countries, will likely undergo different recovery paths. Let us explore some of the recovery scenarios that we are seeing now. V-shaped recovery. That's what seems to be happening now in certain sectors in China. In particular, we are seeing a quick rebound of trade volumes reverting back to pre-COVID-19 levels. From the lows we saw in February, by end April, the volumes of cargo departing from Hong Kong and China are already near pre-COVID-19 levels. We believe this is mainly due to the build-up of pent-up demand when China was in a lockdown after the Chinese New Year. However, we'll be watching whether these trade flows can be sustained in the coming months. With the global recession, global demand is expected to slow down in 2020. U-shaped recovery. A U-shaped recovery means that there will be a period of time between the decline and the recovery to pre-COVID-19 levels. Looking at the number of subway passengers in Beijing, we are seeing a recovery, but it is still substantially below the levels we saw in January, and the recovery in ridership is only growing slowly. Reasons could be changes in local economy, changes in work arrangements, or changes in behavioral patterns. This will take a period of time to readjust back to pre-COVID-19 levels. L-shaped scenarios. In an L-shaped recovery, the growth falls and does not recover for a substantial period of time, creating the long tail of the L. Currently, if we look at the air travel industry in China, we are seeing an L-shaped scenario. Number of departures from the key cities of China, in Beijing, Shanghai, and Guangzhou, have all yet to recover despite the recovery we saw in other sectors in China. Post the outbreak of COVID-19, there had been significant changes in consumer behavior and business models, and chances are people will not be going back to their previous way of life soon. W-shaped recovery. This is perhaps the scenario that worries me the most. In a W-shaped recovery, the economy begins to recover, but then falls into a second period of decline. This is also known as a double dip recession. This could occur if, in order to jumpstart the economy, we prematurely relax the containment measures, and then we see another outbreak further down the road. An example is Hokkaido in Japan, where they saw a resurgence of infection after they lifted the measures too early. They had to reinstate a lockdown for the second time 26 days later. If the secondary outbreak happens, this means that the initial period of lockdown efforts would all have been wasted. And if the lockdown happens for the second time, the balance sheets of companies and countries would already be in a worse shape compared to the start of the first lockdown. So the eventual economic fallout will be much, much worse. In the interest of time, I've just highlighted some examples of potential shape of the recovery. These recovery scenarios may apply to the world economy, certain countries or region, or just to certain subsectors. The key is to identify which recovery scenarios applies to what and at what point in time. It is still early days yet in terms of the recovery from the great COVID-19 lockdown of 2020. So for us at RHB Asset Management, we will continue to monitor, adapt, and adjust our investment portfolio as the situation evolves. The global recession of 2020 is a health-led recession. Therefore, we will need to see a healthcare solution in terms of vaccines or treatment or prevention before the world can convincingly recover economically. And with that, we have come to the end of our podcast. Stay healthy and keep safe.